Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim the Currency Professor, and today is Friday, November 8th, 2013. We've had an exciting week. This week started out kind of slow and then picked up towards the end. The last couple of days have seen a lot of action. So we'll run through all the numbers here in a minute. Just a quick run through on economics. Yesterday we had a couple of surprises. The Euro, ECB, the Central Bank of Europe, cut interest rates by 0.25% down to 0.25%. The general consensus was that this wasn't going to happen, at least not this month, maybe next month, and they may have given a leading indication that they were going to do it next month. Instead, they did it, so it surprised the markets, and of course the euro got hit pretty hard. Then out of the U.S., the GDP numbers for third quarter came in at 2.8%, which was way above the 2% expectations and above last quarter's 2.5. So very, very strong number there. In addition to that, under the hood, so to speak, of that number, most of that was due to inventory. So the general thought was that this is not going to continue into the fourth quarter. That fourth quarter will actually come in lower. Now that's a possibility. That is a distinct possibility. However, being the fourth quarter and that we are getting past the government shutdown the first couple of weeks of October, that may in itself, the holidays may boost that up a little bit. So right now the expectations are for 2% for fourth quarter, which will not be reported until the end of January. So very much everyone's going to be in tune with that. That's also when the Fed meets in January, which again many are expecting to see a change in their monthly bond purchases at that point in time, if they don't do it in December. Today we had the U.S. employment numbers, and those were considerably better than expectations. Also came in at 204,000 for the non-farm payroll. Unemployment did pick up to 7.3%, but that was expected. The 204,000 number was really unexpected. It was a fairly solid number looking at all the specifics of that number. It was actually a fairly solid number. So really, again, the shutdown for the 2 weeks in October does not seem to have really affected the employment numbers that much, which is a very good thing, especially coming into fourth quarter and the end of the year. Next week we got a couple of reports out. On Monday, both the U.S. and Canada are shut down for a bank holiday, so there really isn't too much to report on Monday. Tuesday we get inflation numbers out of the UK. No real big expectations there. The PPI input still expected to be negative. PPI output not negative but unchanged. So we'll see how those come out. That is a concern. Then on Wednesday, unemployment for the UK and claimant count expectations are for the same as last month, 7.7%. And a slight tick down of 30,000 in the claimant account. We'll see how that actually comes out, but the expectations are for a reasonable number there. And then also on Wednesday, industrial production for Europe, expectations are for a negative 0.2%. So that was a little bit worse than last month's 1% number, so we'll see how that comes out as well. On Thursday, Japan reports their GDP numbers. Expectations are for an increase of 0.4. That's coming off of 0.9 for last quarter, so really want to see them do that. Otherwise, they will start to do more stimulus, in which case, of course, it'll be negative for the yen. So a positive on the GDP would be positive for the, or I'm sorry, negative for the yen, and a positive number would be good for the yen, and a negative number would be negative for the yen. All right. On to Thursday, Europe reports their GDP number, again expected to be positive 0.2% after last quarter's positive 0.3. Still not growing very much. And with some of the other numbers that we've seen out of the third quarter in Europe, that number is possibly running a risk of being negative. So again, there'll be concern there with the euro. And then on Thursday also, U.S. reports the trade balance expected to be 38.7 billion, negative 38.7 billion, about in line with last month. And then on Friday, Empire State out of the U.S. Coming in at 5.2 is the expectations. 1.5 was last month. And industrial production and capacity utilization. Industrial production expected to be up 0.1% as opposed to last month's up 0.6, and capacity utilization should not change. All right, on to the technicals here. Euro US dollar down 63 right now. We're about an hour and a half, 2 hours, 2.5 hours away from close. And we can see here on the charts we broke down below this support that we had here, neckline, whatever we want to call it. We broke down below that yesterday on Thursday, closed below it, and now we're continuing lower. So it does not look good here, short term or longer term for that matter. Very much same kind of pattern that we had back here. We went up, made new highs, and now we're vigorously selling off. So this time around, probably a lot more people are going to be scared. There's still a lot of analysts running out there saying, oh, Europe is still the place to be. They're still going to grow, and that is a very good possibility. However, it is not certainly at the pace as anybody else. So they're the weaker of the larger groups, the larger economies, and the euro is certainly overvalued because of that. On a monthly basis, well, this is turning out to be a very, very negative pattern here. We got that tail from last month. So this month, if we close below September's lows, that would be very bearish here, and that would turn us around, and that could send us down to the low 120s or even below that. Pound dollar down also today, down about 67. Yesterday it actually closed up after all the news, and it was a 4-day up move there. But here we are, we're giving it back now, and we do have a neckline here as well with a double top. This is a very, very strong double top in here, so really do not expect it to rally back up and take those highs out. And jumping out to the weeklies, we can see here the weeklies very heavy top, two top patterns in that whole mess here. So really looking for this market to sell off, and probably sell off quite quickly as we move on here. And on the monthlies actually look the best out of all the charts. We got kind of a flagging kind of a position here off of that huge run up in September. Whether that holds or not really would be kind of a guesstimate at this point. It's got a very nice V or U-shaped bottom here, but this is really not a bottom in the sense that we're still in the same trading range here as we have been for the last several years. So longer term, got to go with the trend. Trend is still down. Looks negative if we get any kind of bearish tone to it. U.S. dollar against the Swiss franc up very nicely today, up 68 right now, back up above 92. We're having a very beautiful pattern here. We came down, we made some lows, came back up, thought we were going to consolidate here for a while. We've just busted right back up, but that's kind of the MO of this cross. Once it starts moving, it moves and really doesn't stop too well. So more than likely we have these lows in here. We jump out here to the weeklies. We can see how we were down here in the same lows that we were at back here in 2012, in February 2012. So we made a nice bottom. We shot up last week, reversed 3 closes on the weeklies. Very strong pattern. So here we are now this week. We're closing up again. More than likely we will see at least a third week up next week. And we should get up into this area, which is about the 93.50, 94 area. So next week we could finish up the week another 200 pips higher as well. And on the monthlies, we're looking very good. We need to close higher than September's high initially, and ultimately higher than this multi-year trend line that goes back 35, almost 40 years. So that we would need to close significantly above that, around the 102, 103 level. on a monthly basis. U.S. dollar against the Japanese yen, very nice day today as well. Really looked like it was a reversal yesterday. We opened up, we ran way up on the news yesterday, and then vigorously sold off. We had over a 200 pip range yesterday, and here we are recovering today. We're up 100, back above 99. Looks very good again. And we jump out here to the weeklies. We can see how we're really starting now to we've come to a point, and then we're starting to break out here to the upside a little bit. So once we start getting that momentum again to the upside, it won't be long until we start really rocking and rolling up out of here and pacing ourselves month by month again on an upward path. So looking for that to happen here shortly. Euro Swiss also up today, up about 28 right now. We were down just below 122, I'm sorry, 123 into the upper 122s yesterday, and since have turned it around now. Really looking like right now out of this pattern we could start to rally back up here, probably get back up above 124, and we could do that fairly quickly. Actually, this market can move. We look here on the weeklies and we can see how we're kind of coming to a point, and every time that we've done that kind of a scenario, we've just exploded up out of there. So really looking for that kind of scenario to happen again here. Euro yen up today, up 72. Really sold off hard yesterday. We've really come off of those highs around that 135 level. And we built that double top up there, so it looks like it's having a difficult time, and this is really more from the weakness of the euro than strength of the yen. The yen is still kind of a dubious quasi type of movement at this point, so it is more what we're seeing here is more the weakness of the euro than of the strength in the yen. We jump out here to the weeklies and we can see we are below this minor trend line. However, we are moving straight across here, so it's not exactly a bad thing. It's not good, but it's not bad. On the monthlies, we're looking a little bit bearish right now, but we could still run up to that 137, 138 intra-month, and really expect that to happen probably soon, either this month or at the very latest next month. U.S. dollar against Canadian, another nice move today, up 32, just knocking on that 105 level. We did pierce it today, just barely, and then fell back. But overall, we're really looking pretty decent here. It's climbing. It's just not doing it in a very regular pattern. We jump out to the weeklies here. We can see how this week now is shaping up pretty good. We're closing almost at the highs of last week, which is an encouraging sign. Next week, if we could get up above those highs that we had back several months ago, which is about the 105.70, 105.80 area, up in there. If we can close next week above that, that would be very good. And jumping out here to the monthlies, we can see how this month now is shaping up to be pretty good. This could be the lead-off month that takes us above those old highs, closes above those old highs, and sets us up then for a much larger move on a monthly basis. Australian against the U.S. getting hit hard today, down 75. We're back down below 94. Really looking like we're going to be heading back down to some new lows. We had this nice move up here. We have not tested that, but again, this was on a correction. So we moved up, came down, moved up again. We should move up one more time, but this market is very weak. Anytime we do get any kind of a rally, the sellers jump in there quite heavily. Jumping out here on the weeklies, we can see how we ran up there, nice correction. Now we're just leaking back. If we don't make one more thrust up to those highs, try to make new highs, then we're going to fall apart here very quickly, and we're going to see this thing come right back down. And we could do it even with the remaining time left in this month, 3 weeks left. We could be right back down at 89 by the end of the month. So kind of a real bearish tone there. Really not looking for anything but a follow through on this correction in here, and we probably are done with it at this point. We could make one more stab at these most recent highs up there at 96, maybe 97, but overall, it's definitely a bearish tone to it. So that's it for this week. If you're not a member of FX Addicts, please stop on by. We do offer a 7-day free trial, and that allows you access to everything of FX Addicts, including the live trading room, chat room, the daily videos, everything. And if you just want to chat about currencies, economics, or interest rates, by all means, feel free to shoot me an email, tim@fxaddicts.com. I'd be more than happy to talk to you anytime about those subjects. Thank you.